Good morning, folks. You are welcome to CFA Level 2, the second best decision of your life. So, today we're going to be talking about time frame alignment. So, you can see here on the short note on your screen, I'm going to go briefly through it. So, on the monthly time frame, if you got a monthly key level, you're going to be going lower to a daily. That's your lower time frame. Your monthly is your higher time frame. Then you go down to lower time frame, which is your daily. Then when you're done on the daily, your weekly, you go down to your 4-hour time frame. That's your lower time frame. If you got a weekly key level, you go down to the 4-hour time frame to refine your entries. Then if you got a daily key level, you go down to the 4-hour time frame. And also, if you got your 4-hour key level, you go down to the 15-minute time frame to look for your entry model. And on the 1-hour time frame, you go down to your 5-minute time frame. Then if your key level is on the 30-minute time frame, you go down to the 30-minute or 2-minute time frame. And if your key level is the 15-minute time frame, you go down to the lower time frame, 1 minute. And always remember, time is fractal. Time frame is actually fractal. What does that actually mean? It means that I might actually have a let me say a 4-hour key level. Then I can actually refine my entries on the 5-minute time frame. So let me give you an example of the current week's price action. Let's start from the weekly. So here on the weekly time frame, let me start with this week. So here on the weekly time frame, we got a CRT high, which was actually taken out with this move, then closed below. And we can target our CRT low here. Remember, from the weekly, you go to the 4-hour time frame. So going down to the 4-hour time frame here. So here is the beginning of the move, which is actually your total soup. And you can see your liquidities above these highs. And go to the 1-hour time frame so you can get a clearer view of this structure here. Your liquidities above these highs here. All these are consolidation. Consolidation, rate, then expansion lower. So here, let's go back to our chart. Going down to the 4-hour time frame. Here, you can see the 4-hour key level, which is actually our breaker block. Remember the structure of your breaker block. Pop above a high, displacement below, return back to the high. It will offer support. Remember I told you time is actually fractal. So here we got our breaker block on the 4-hour time frame. And you got your total soup sweeping this high, then tapping on our breaker block key level. So let me go down to the 15-minute time frame of this structure here. 50-minute time frame on this structure. After sweeping this high and tapping on our key level with that move, remember you go from the 4-hour time frame to the 50-minute time frame. This was actually a high probability total soup. Tapping on this 4-hour key level, you go down to the 50-minute time frame and you got your total soup and displacement lower. So here, let me go down back to the 4-hour time frame. So here, breakout block, 4-hour candle range, taps on key level and displays lower. You can actually take this trade here from this order block here and hold on. You can take this trade here from this order block and target this side of the liquidity as your short-term draw, and your main bias was actually bearish and you can position yourself for short here. Wait, let me go to the 50-minute time frame of that order block. So here, the 50-minute time frame, it wasn't actually a nice price action though, but you can still trade it kind of and expand towards your short-term draw on liquidity, which are actually these highs. Taps on 4-hour key level, then displays lower. Let me take this off. So going back to the 4-hour time frame here, remember our drawn liquidity is still lower, so we are actually bearish and you should be looking for sales. So the market actually displaced lower and boom, crashed finally. So here, coming back to this structure, let me put this here. Okay, good. Coming back to the same structure, you see this candle here, which actually swept liquidity, tapping on this key level here. This is actually another block. And remember, I told you, other block, the midpoint is actually very sensitive. And you can see marking this out, the midpoint of this other block here. Let me draw another line here. Okay. So this is the midpoint. Let me take this off. This is the midpoint of this other block here. So remember, from a 4-hour key level, you have to go to the 50-minute time frame. So here, you got a high probability total soup. Key level and time. That's what actually makes total soup a high probability. So here, sweeping this high over here, with this move, that's your total soup. And range manipulation, decline, total soup. So here, if you look here to your left, the markets have actually been sweeping highs and breaking below lows here. Let me give you a structure. Range, total soup, decline. Range, total soup, decline. Range, total soup, decline. Here, total soup, decline. Same thing here. Total soup into key level, decline. And also here, total soup into key level, decline. So you can see how the market is actually literally tipping its hand to you. You just actually have to open your eyes clearly to be able to see it. So let me take this off so we can continue our class. So here, going back to the 4-hour time frame, and this is actually our 4-hour order block, and we can expect lower prices for our weekly CRT low, and price actually committed suicide and dumped to our major weekly CRT low. So you can see how time frame alignment, you can use this to actually give you more confidence in your trade ideas. So let me show you other examples of last week's or last 2 weeks ago price action. Let me take these off. Going back to the weekly time frame, moving from range high to range low. So let's start with this range low to range high. So let me take the bar replay back to this. Okay, here we are. So remember, we actually moved from the weekly to the 4-hour. So going down to the 4-hour time frame here, and this is the beginning of a move, which is actually total soup. And the market actually closing above this candle here. Let me mark this out. Market actually closing above this candle is actually telling you the market has actually changed its state of delivery. It might not actually retrace to this, and it might keep expanding. Just in this case, you can see the market didn't retrace to this, it went up higher. This actually changed state of delivery. There is not actually a lot of difference between a change in state of delivery and an order block. So here, going higher, and you got your mitigation block over here, which was actually tapped with this move. Over here, and this is actually a lower time frame total soup. If you go to the lower time frame of this structure, you will see it's actually a total soup. So let's just dive into the lower time frame. Remember, you move from the 4-hour time frame to the 15-minute time frame. So here on the 15-minute time frame, there's actually a total soup. Sweeping this low, then takes a breath, then first leg of expansion, retracement, second leg of expansion, then higher prices with this move over here. So let me show you how this actually done. So going back to the 4-hour time frame, 4-hour key level, lower time frame to the soup below this week, and price went higher, and you got your retracement into this breaker. On the 1-hour time frame, you can actually see this clearly. This is actually just a week, but you go to the 30-minute time frame. This is a failed order block. So remember, our key level was actually from the 4-hour time frame, which is actually this here. This is our key level. So we go to the 15-minute time frame. Okay, here we are. So the market dipped once into this key level, reacted off it, created a little liquidity here, sweeping them with this order block over here, and making this a high probability order block, retraced into the order block and expansion higher without any retracement into these highs over here. So that's how you actually use time frame alignment for your own purpose. So here, after clearing out this liquidity over here and above these highs also, we got a decline in price going back lower into our forward order block over here. Our forward order block over here. Okay, let me take this off. Our forward order block over here. And if you actually go to the daily time frame, let me take this back in time. If you actually go to the daily time frame, this is actually a daily CRT here and a rejection block. And 50% of that rejection block, lower quadrant, is actually a 4-hour order block. So here on the 4-hour time frame, let me mark the CRT high and CRT low. This was the low. And the high. Yeah. So key level, 4-hour key level here, and we can actually determine our next move from the 4-hour time frame. Remember, time frame alignment from the 4-hour time frame, we go down to the 15-minute time frame. Sorry about that. Okay, here you can see how this actually played out beautifully. So here, this is actually a high probability total soup. Remember, I told you key level and time actually offers high probability total soup. So sweeping this low over here with this move and tapping on this key level and closing above this candle confirms bullishness. Closing above this candle here confirms bullishness, and you can target your opposing side of your daily range here into this move here. So that's how you actually use the higher time frame buyers to actually frame your lower time frame. So here there was actually a failed order block. Why did this order block actually fail? This 1 hour order block. Why? I will actually explain in one topic. There is a topic I'm going to talk about, and I'll explain why this order block actually failed. And why is because there were liquidity below it, and there are also a lot of reasons we're going to talk about on other topics. So here the market expands, creating a 1 hour candle range over here and sweeping candle range low with this move, then expand with one big bulky bullish candle. So going back to the 4 hour time frame, you can see the structure. Remember our weekly CRT high over here. Then that's how you actually use time frame alignments. So here again, was this called this high, which actually supported price? Was this called? This actually another block. A breaker block. This actually a breaker block. Remember the structure here. Lower prices, higher prices, breaking above this high, retracement, offer support higher. That's the structure of a breaker block. Yeah. So you can see the market actually moves from key levels to key levels. So we got our 4 hour key level going down to the 15-minute time frame here. And we got a total soup into this key level with this move. Okay, and close above this candle, and which the market actually retraced to with this move here. Let me play this back in time so you can actually see it clearly. Immediate retracement, and there you go. Retracement into this high over here, and started moving higher, and also a retracement into where the lower time frame breaker block over here, and higher prices towards this old high over here. So that's how you actually use time frame alignment to your own benefit. So that will be all for today. You can see how the market is. Let me just say one more thing. So there's a range, and sweeping below, closing above, and the market explode higher to the opposite side of the range. Same thing here, a ranging candle sweeping below into the midpoint of this rejection block and closing above, higher prices. Same thing on the weekly time frame. Here, range sweeping below, closing above, target opposite side of the range, and same thing here, sweeping above this candle range high over here, closing below massively. It closed below massively. The next candle expecting to